Okay. Am I audible and visible, sir?
Yes, yes.
Okay. So, a very good evening, everyone. A warm and hearty welcome to everyone present in this webinar on open banking, organized by Department of Computer Science of Engineering of JIS College of Engineering, and myself, Polu Mondol, a student of Department of Computer Science and Engineering of JIS College of Engineering, and your host for this evening. Now, I want to request Honorable President of Alumni Association, Mr. Sumanta Chatterjee of Department of Computer Science and Engineering, to say the welcome address for today's webinar. Over to you, sir.
Hello, am I audible?
Yes, sir.
Okay. So, very good evening to all of you, respected faculty members and my beloved students. Welcome all of you in the webinar of Open Banking. Today we have with us Mr. Subhranil Mukherjee. He is working as a Business Development Manager, Tata Consultancy Services, and he is also the alumnus of Department of Computer Science and Engineering, JIS College of Engineering. Welcome, Subhranil, to this webinar.
Thank you, sir.
So today he will actually focus in the field of the open banking. Hope this session will be helpful for the students. So I will not take the much time. So I hope this session will be helpful for the students and those who are present in this meeting. So over to you, Polomi, and start this session.
Thank you so much, sir, for these beautiful words. Now, I want to welcome our today's respected speaker, Mr. Subhranil Mukherjee, currently Business Development Manager at TCS and alumni of Department of Computer Science and Engineering of year 2013. Subhranil Mukherjee, sir, is an ex-student of CSE Department of JIS College of Engineering. He is currently working in Tata Consultancy Services for more than 9 years in multiple technology areas like software development, infrastructure services, digital transformation, business 4.0, agile, and DevOps, data science, etc. He has also completed his postgraduate program in management with dual major in marketing and analytics. He is currently working as a business development manager in banking and financial sector, Latin America geography. Today, he will be delivering a session on market dynamics in banking sector, the importance and adoption of open banking. So now, without any further delay, with permission of our Honorable HOD Sir and all respected professors, I want to request Subhranil Sir to start our today's webinar, Open Banking. Over to you, sir.
Thanks a lot, Paulami. Thanks, Shumantu sir, and all my respected faculty members of Department of CSE, JIS College of Engineering. Thanks for giving me the opportunity to share my thoughts, my knowledge, and my experience that I have gained while working in this particular sector of banking and financial services. So on request from the Department of CSE, I thought that I will try to share the importance of open banking in today's technical world, especially in the sector of banking and finance. It is a very niche area, and it is very important to understand because in the coming days, in the next 5-6 years, it's going to be a mainstream area where all of the leading IT providers, the banks, etc., will start focusing on. Okay. So as Polomi said that I am covering Latin geography for my work, and hence right now I am delivering this session from Bogota, Colombia, which is probably 16,000 kilometers away from India. So just to use the better bandwidth, I will switch off my video and will share my screen, and I hope you all will enjoy the session. And definitely after the session, if you have any queries, if you want to reach me, you can do so. I will share my contacts with the respected faculties of the department. Okay, so without further delay, I am sharing my screen. Just let me know if it is visible to you all. Okay.
Yes, sir. Yes, sir.
Okay. Thank you so much. Fine. Fine. So basically, I will start with what is open banking. Okay. Basically, open banking is the future of how our financial systems work. And if we look for a deeper understanding of what it is, why it matters, how it works, and why APIs are such an important part of it. So all these things we are going to cover in this particular session. Basically, open banking refers to the use of APIs to share the financial data and services with third parties. Third parties typically provide technology, a service, or an app to the bank's customer that makes use of the shared financial data and services. The shared financial data can be the statement or the transaction records that belongs to the bank's customer. Now, a question will come to your mind that is our data openly available to everyone? No, that's not the case. The data cannot be made openly available to everyone, but it is only shared at an explicit request of the customer, we all. So when open banking provides this data, it also provides the technological infrastructure as well as the legal framework to make such consent-driven sharing happen. So a few questions that we will try to cover throughout the session is that, is it mandatory for banks to provide open banking APIs? If open banking is mandatory, until when do banks need to implement and what are the timelines? Can bank choose to work with only some third parties or they need to work with all the eligible third parties? What constitutes an eligible third party? Do banks need to build API according to certain specification? Which banking products and banking services are in scope of open banking, etc. Moving on to the next slide. This is the evolution of open banking. If you see from the left to right, okay. Fine. Yeah, look, if you see from the left to right, open banking is basically the shift from the closed banking to the open banking model.
Sorry, sir, for interrupting you, but I think, sir, your last slide is opening, the thank you slide. Actually, the slide is not changing.
Is it so? Just
yes, sir.
Yes, this is the main problem.
One second. I will share my screen. Is it visible now?
Yes.
Yes, sir. Yes.
Okay. Yeah, so basically the shift of open banking is from the closed banking that we all know, where everything was between the customer and banking institution, where the closed ecosystem had limited data access and sharing, some monolithic business model. But with the movement of open banking, now the data is available to customers, aggregators, payment providers, the IoT devices, the government, service partner, telecom partners, everyone. So basically it's a bidirectional data access. Your data is been shared with these aggregators or government and some other third-party agencies. It can be a travel sector, insurance sector agency or telecom sector. And if you have some data or some other data is available with them, that data is also combined with your data to give you better results. So it's a bidirectional data access and sharing. It's a distributed business model, and it is moving towards, right now it is open banking, open finance, but it's slowly moving towards banking platforms and banking as a service. I will come to these parts later. Okay, but what are the typical challenges of the banks? So with respect to their digital transformation, banks are facing little bit of challenges. So there have been some businesses that introduced used computers in times where they are still synonymous with big mainframes. Softwares that were used to automate banks' internal process, those parts that customers never see, customers interfaced with their bank via their branch only earlier. Okay, but today customer interface with bank are through smartphones, are through websites or voice assistants. They interact with bank via softwares, and software has become the differentiators. Traditional banks, they already observe that customers are switching completely to new digital banks. How many of us uh, like to use a digital bank such as RBL or DBS or SBM banks, okay, over the traditional banks of India like SBI or Axis Bank, etc. So we are having a tendency to switch to more digital products. We are using frequently phone pay, we are using Paytms, etc. Those are basically small size digital banks. So the traditional banking system, they are facing a challenge to retain their customers. Why? Because they're trying to understand why customers are switching to the new digital banks. So the customer need is changing. Customers are demanding more digital solution, and banks organically grown legacy systems are often very complex, expensive to change, and they cannot hold up to the requirements. Bank customers are interested in using new innovative apps to manage aspects of their personal finances. This range of financial apps, they provide a holistic overview of the transaction, the balances across multiple bank accounts. If you see phone pay or Google pay, you are able to see your balances, you are able to manage your multiple bank accounts. If you are having accounts in suppose SBI, you are having account in the Syntaxis, ICICI, different banks. For now, earlier we had to do, we had to log into the individual system of the banks and then make transactions, see balances, etc. But due to this openness of data, now what we are able to do, we are able to manage all those accounts from a single place. We can see balances of all those accounts through a single click or single touch through your smartphones. Now next thing is like the regulatory complaints. The regulation also increasing the competition in the banking by enforcing open banking, mandating the banks to share the data. The regulatory requirements needs to be implemented within the given time frame also, and if the banks are not implementing these regulations, fines are going to be imposed on them due to non-compliance. Okay. So now how the banks are leveraging the open banking APIs to face the challenge. Now open banking can make it easier for the bank's customer, but why open banking strategically interesting for banks? Why won't banks need to give up a lot of their control? To face the challenges that banks use APIs for system modernization, regulatory complaints, and to realize ecosystem and platform business strategies. So first, the system modernization. Banks rethink their monolithic application to become more agile, to be able to react with future market changes more quickly. Monolithic systems are decomposed into microservice architecture with APIs. These internal APIs are primarily used internally to power the multiple digital channels of the bank, such as the bank's mobile app or website. These internal APIs can be the basis for open banking initiatives, whether these are enforced by a regulatory or enforced by a regulator, or the APIs are used voluntarily for open innovation to build platform and ecosystem. Next is the regulatory compliance. To ensure the bank stays compliant with upcoming open banking regulations, which is the worldwide trend, but the laws are regional though. I will show you one quick thing. If you see this open banking map, look, this is a map of the open banking status across the globe. So you see three colors, right? Light green or blue, whatever you say. Wherever you see this light blue color, you see that regulatory approach is been taken for the open banking. Wherever we have the dark blue or green color, so regulatory PhD to PSD2 approach has been taken to open banking. I will come to what is PSD2 later, but just look at this map. And the yellow spaces are saying that there the market-driven approach has been taken for open banking. So somewhere or other, some kind of approaches have been taken across the globe, except some few countries. In India, if you can see, it's a market-driven approach for open banking. In Canada also, you can see that it's a regulatory approach for open banking. In USA, it's a market-driven approach. In the Europe region, it's already PSD2 regulations have been kind of enforced on the banking and financial institution for the open banking. Fine. I will show a quick video. Just go through this video. Look at how Kotak Bank of India, they are trying to use their open banking, and they are asking the financial institutes, small players also, to collaborate with them using their open banking interfaces. Let me know if the sound is visible of this.
Are you looking to expand and digitize your business? Have you ever wondered how you can manage your business through your phone? Do you want to make your collection, payments, and refunds easier? Well, Kotak has the perfect solution for you. Kotak's state-of-the-art API solutions enables a diverse range of businesses like MSME, BFSI, e-commerce, and many more to cater to all their varied requirements easily and effectively. With Kotak's payment APIs, corporates can instantly access payment modes like NEFT, RTGS, and IMPS for vendor payments and salary compensations. Kotak's API allows businesses to seamlessly monitor their money collection needs by creating virtual accounts for their dealers and distributors. You can easily identify businesses with unique identifiers and increase your business efficiency by managing all your collections with real-time reporting. You can empower your businesses with our UPI services to create static or dynamic QR codes with integrated intent links on the go and delight your customers with an effortless payment experience. Moreover, businesses can now stop worrying about sending collect requests to their customers via SMS or emails for recurring payments. Our UPI auto-pay integration allows corporates to register or modify the mandates on the go through the APIs in real time. Our payment gateway APIs help businesses receive payments via all payment methods, including UPI. While our smart e-invoicing feature can itself send payment links to your customers over SMS or email for collection against their orders so that you can enjoy faster payment collections with automated reminders. Wide range of businesses like NBFCs, mutual funds, insurance companies, educational institutions have chosen our API to integrate BBPS and NACH and seamlessly manage their receivables. Kotak's API banking also gets you a host of benefits like customizable APIs, encrypted information flow, lower TAT, access to developer platform, and much more. Now that you know how useful Kotak's API banking can be, let's look at how you can get started. You can now register at our APIM portal, initiate UAT testing, and seamlessly go live. Enter your details and create an application based on your requirements. Post verification and bank approval, the client ID, client secret, and access token will be shared with you. This secure client ID and access token is unique for every business registered. Contact us to digitize your business with Kotak Mahindra Bank and enjoy a seamless banking experience today.
Yeah, so you can see that how many different sectors can be integrated with the banking sector, and how it is so much easier now for the small businesses, the MSMEs, to get the data of the banking customers to get access of the huge volumes of data that the banks have with them. Okay, moving on to the next slide. Right. So now here I will try to explain the old versus new, the importance of the bundling and unbundling. This is a very important concept in case of open banking. On the left, if you see the Lego blocks, so basically these are the what I would say the basic bricks to create the building. Okay. Now we are going to look at the API in banking and the role of APIs in bundling and unbundling. So what are these concepts, bundling and unbundling, while they play a role? The concept of bundling is actually something that we take from the business side. It's a business concept. We take two or more parts, when you combine them with together to create something new, to create a bundle. For example, you have these Lego blocks, and out of those Lego blocks you are going to build an aeroplane. Okay, so you are going to bundle these small blocks to build this aeroplane. This is called the bundling. Now what is the reverse of this? The reverse of this is unbundling. That is, the little package that you have, now you can break it into small parts, or you can reassemble these. You can simply reassemble the existing blocks into something new, or you can also add a few new blocks into it. Just for as an example, from this particular aeroplane, you can transform it into an elephant. So it's just taking the same parts and putting them together in the new way. What used to be a space trip before, it's going to be it's going, like earlier it was a space element, the aeroplane. Okay, and next it's going to be transformed to an animal out of the same Lego block. Now why I explain this concept, let's look into that in the next slide. These are the three dimensions of the banking, the bundling and unbundling. The past is what we know, banking as we know. The present is the open banking and open finance, which we are trying to know, and the future is the banking as a service. If you look at it, in the past we started to move slowly. Looking at the past banking, you can see that we start up with the concept of bundling in the past. How we used to do bundling? Basically, if you have a credit card of a particular bank, suppose for example HDFC Bank, it is very likely that you also have a savings bank account. You might have an FD or RD with the same bank. So basically the banks used to bundle their financial products and try to sell it to the customers. But all those products were very concentrated or very much related to the particular bank and the core banking services, as you can see. What is the next step in the, like when we are moving to open banking and open finance? Basically, we are now having APIs for credit card. We are having APIs for current account. We are having APIs for savings account. Now, these APIs can be used by the bank as well as by some third-party providers. It can be a financial institute. It can be an insurance sector company. It can be a travel sector company. It can be a logistics sector company. So the same information is now accessible by some other third parties through using the APIs. So basically, now it can happen that while you are going to Policy Bazaar or similar kind of website, what is happening? You can see all the different insurance policies being offered by the different bank by using their APIs. You can choose a particular insurance policy from ICICI Bank, but while you are comparing the savings account schemes or the RD or the FD interest rates, you might find that no, HDFC Bank is giving me a higher rate. So for opening a savings account or making an fixed deposit, you can choose HDFC Bank for that case. So it's not necessary that you will have the same product or like all the products from the same bank, which earlier we used to have mostly, maybe 15-20 years back. But now slowly we have moved to this open banking. Also combining with open finance, like the retirement accounts, trading accounts, mortgage accounts, for these areas also we are having some open APIs. And what is the, so basically this is unbundling of the products. Earlier it was bundled, now it is unbundled. What is going to be the future? In future, it's again going to be bundled as per the sine curve rule. What will happen? Look, what is happening in banking sector, this APIification has been happening in other sectors also, in the sector of logistics, in the sector of accounting, transportation. So there can be one API in banking sector which is combined with an API with logistics sector to give you a new experience in a new app or a new website. Same can happen as like you can combine a banking API with an accounting API, and you can get a new product. Similar for transportation also. So this is how from bundle we are going to unbundle the products, and in future we will again bundle it to give the users, the customers, a new kind of experience. Fine. Yeah. So basically, what are the driving forces for this particular unbundling of the banking models? Mainly, there are four key drivers which are driving this unbundling. One is the regulation, next is the competitiveness, third is the customer expectation, and fourth is the connectivity. Now let's try to slowly double click on each of those areas. First is the regulation. I was talking about PSD2, right? So what is PSD2? PSD2, the main objective of PSD2 is to contribute to a more integrated and efficient European payments market. If you remember, I was showing that map and we saw that PSD2 have been enforced in the market of Europe. So it is a regulation which has been implemented in European Union. The objective is to further level the playing field of the payment service provider by introducing some new players to make payments safer and more secure, and to enhance the protection of European consumers and business. In other words, PSD2 supports innovation and competition in retail payments and enhances the security of payment transaction and the protection of consumer data. The PSD2 supplemented by regulatory technical standards on strong customer authentication and common and secure open standards of communication, as well as guidelines on incident reporting and guidelines on security measures for operational and security risks. The three documents were developed by the European Banking Authority in close cooperation with the ECB, and payment service provider has to comply with that. So basically, these are the this is one regulation that has been implemented or enforced in the European Union. We also have the Competition and Markets Authority. So what happened in this particular case? A particular report which is called "Making Banks Work Harder for You" was published in 2016, and it sets out a series of findings and measures intended to help customers and access better value services, and to enable to take them the control of their particular finances instead of giving it in the hands of the banks. It also helped to allow or enable the new entrants or small providers to compete with the big banks or the big financial institution. Also, we had something called pensions dashboard. It will help you to see all the different pension pots together. As I was saying, in India, in Policy Bazaar or Paisa Bazaar, we can see all the different insurance schemes available in each and every area of insurance. For example, a term insurance, life insurance, etc., medical insurance. So it's so pension dashboard is similar, where the UK government opened all the pension pots to compare so that the end user can choose. So these are the different regulations being implemented by the governments of respective countries or respective continents, which is driving the unbundling model for the banks and the financial institution. The second one is the competitiveness. What is happening due to this? It is happening that a lot of non-traditional players are entering into the market. Okay, mainly the fintechs. So we are listening to this buzzword fintech nowadays. If you have, I hope that many of you have seen the Shark Tank India, where you can see Ashnir Grover, who was actually the CEO of a big fintech, and many of the new entrepreneurs were pitching for their fintechs towards the shark. So we are seeing increase in the number of fintechs being developed. Okay, so this is what happening, and this is what forcing the banking institution to open up their data, because these small players, they are having a direct relationship with the customer through their apps. If you see these apps like Yolt, also if you see our SBI app that is called Yono, that is also though it's from a traditional player, but it's also a kind of fintech, you can say, where you can do multiple activities through it. Also we are because of that, emergence of new service offerings are coming out. So earlier in your mobile banking app, you were able to see your balance, you were able to probably make a fixed deposit, or you could have paid your credit card bill. That's all you could have done through your mobile banking. But if you look at your mobile banking interfaces now, you see them changing very frequently. So in probably every 6 months, the new features have been added to the mobile banking or the internet banking area. Now what you can do, you can open a trading account, which is actually not a direct banking activity. You can say it's a financial activity, but you can do it through the bank. You can open a trading account, you can do trading through your banking system. You can pay your utility bills through your bank. So many new features have been added which are not core banking features. So this is increasing the competitiveness in the market, and that's why each and every player in the market, whether it's big player or small player, they have to open up the data and they have to play with the data. Number 3 is the customer expectation. What is expectation from customer? Now, if you see, Policy Bazaar is giving you the comparison of all the insurance policy. You will expect that some other company will come up, or your bank will also give you the same information, that which kind of policy is better for you based on your requirement. Or you can also expect that your bank will tell you that in which sector you should invest to secure your future maybe. So the customer expectation is being increased with the increase of the mobile connectivity. Earlier, you think there was a time, you must know, that we all had to go to the bank, we have to collect a token, we have to stand in the queue to simply take out the cash out of the counter or the bank. Now, to take out the cash, we go to ATM, we quickly do it. But slowly we have moved to a cashless economy. Now we don't even need the cash. We simply do the transfer through UPI, because we always have a smartphone in our hands. So that's why with the increase of the mobile connectivity, you just think, if the internet connectivity was not what we have today, was it really possible to implement UPI successfully? Whether it was possible to use UPI in the rural areas of India. But if you look nowadays, even if you go to a small kirana shop at any place of India, mostly they will accept any form of UPI or digital payments like Phone Pay, then Paytm, Google Pay, any of this they will accept. So the connectivity has increased. And number 3 is the contextual service. So basically now we don't want like any random services. We want services to be very specific to us. Okay, suppose I am 20-year-old, or you are 23 years old. You go to the bank and the bank is offering you a pension plan. Okay, but it might not be the right thing for you. You are not expecting a pension fund at the age of 23. Maybe you want to do more investment, but it is not possible to know, like it's not possible to know by the bank that in which area you are more interested without having your data. But if the bank is having your data, what kind of searching you are doing in the search engines like Google, what are the most web pages that you are visiting, if you are visiting the share market pages more, or you are visiting the pension plan pages more. With this kind of data, the bank will now get the understanding that in which area you are more interested in. So they will now definitely not offer you a pension plan. They will rather say that we are having a good discount on opening a trading account with us. Are you interested? Probably you will say yes, I'm interested in opening a trading account. The bank will get more business out of you. Instead of that, if they are offering you a pension service, definitely you will say no, I don't want a pension service right now. I have a lot of life left in me. I will think about it when I'm in my mid-30s. Okay, so that's how the expectation and the contextual service is becoming so relevant, and that's why the use of the data, the importance of the data is increasing day by day. And the final one is the connectivity. The connectivity is like the open APIs, the microservice architecture, or the scalable next generation infrastructure. With this, especially in the scalable next gen infrastructure, ideally, we all know how the cloud has been booming nowadays. Okay, so earlier companies had to maintain their own hardware, own infrastructure, own data center to maintain all their data. But now, the with the ease of scalability, with the involvement of the cloud, what has happened? Suppose today you are having only 50 customer, you are a new player in the market. So for 50 customer, you don't need to buy 100 servers. Okay, in fact, you don't need to buy any servers. What we will do, you will create your infrastructure on cloud, and you will only pay for this infrastructure which is required to support 50 customers. But you don't know, you might do very well in the upcoming years, and after 2 years you see that your 50 customer has now become 50,000 customer. So what will happen? You cannot support this 50,000 customer with the same infrastructure. If you have invested in your own data center for 50 customers, you would have bought a very small space. But when you have 50,000 customers, now again you have to buy a new space. So you have to take rent of the space, you have to buy new servers, etc. But with the help of cloud, now you can simply say that no, I have 50,000 customer, please rent please give me the code for the infrastructure that will be needed to support 50,000 customers. And by a single click, with little pay, with avoiding all the fixed cost you are having for your own infrastructure, with just giving the extra variable cost required for these additional customers, you can scale up. Similarly, it can happen the other way also. You can slowly scale down also if you are not doing good in the business. So that's why you can kind of counter your losses also if required. This is giving you the flexibility. So these are the main four drivers that are going to shape the future. Now here is an interesting topic that is called the banking stack. Okay. So basically, this is the traditional banking stack that we see. It has mainly these three elements, that is customer, channel, and products. But if you look deeply, basically there are two elements. The customer is actually outside the enterprise of the bank. It is external to them. if you look at these orange blocks, the channel and the product, these are the both of them are belongs to the bank. Okay. What do you mean by channel? Like whether you are accessing the bank through their website, their mobile banking, these are the different channels that the bank is having, or you are going to the branch, physical channel also. So the uh, the kiosks or the wherever you are interacting with any kind of bank products, you are going through some channel of the bank. So both the channel and the product, this belongs to the bank in a traditional banking. Now what is happening with internal APIs? What happening in internal API is that bank is trying to separate the channel and the product. Okay, they are using a kind of zip, but the zip is now closed. No other entities who are outside the bank can access directly the channel or the product, like can directly access the product without accessing the channel. You have to still access the product through a channel only. But with this zipping, what can happen with this internal APIs, the products of the banks can interact with different channels. So earlier what was happening, a particular product was available only for a particular channel. For example, you could have opened fixed deposit only through internet banking, but not through mobile banking, because that fixed deposit opening product was available for the channel internet banking. Now with the use of internal application, what is happening, this particular fixed deposit opening product or service, you can say, is available for internet banking as well as for the mobile banking. So mobile banking and internet banking are two different channels, but both the channels can call the product of fixed deposit opening through the API that has been created for fixed deposit opening. But still, if you want to open the fixed deposit as a customer, you have to either log into internet banking or the mobile banking. You cannot open it through a third party. Now here the open banking API is coming into the place. What's happening? This zip is now a little bit open. So now third parties can access the product. They can integrate the product with their channel or with their service offering, but still it's not fully open. Like suppose you want to open a fixed deposit from the savings account you are having in ICICI Bank, but to have a balance in your savings account in ICICI Bank, you have to first go to the ICICI Bank channel, whether you physically go to the bank, whether you go through internet banking. First you have to open the account and keep balance, then only you can go and do the FD through some other channel. So the product is available now to the third party, but still there will be some interaction that is required to go through the bank's channel also. You cannot completely avoid the bank's channel. So this you can say that partial opening or the partial separation between channel and product. Now what is happening with these APIs? Now bank is saying that, look, now I am going to only own the channel and the product. I don't want to own the APIs. Let some other third party build the APIs for me and let it be used. That is a traditional APIification. And I was talking about banking as a service. So this is going to be the future. What will happen? The bank will say, I don't want to own the customer. I don't want to own the channel. I only have the product and the APIs. So basically, any other third-party channel can access my products through the APIs. And then comes the plug and play model, where the bank will say, no, I don't want to own the customer. I don't also want to own any product. I only own the channel. Okay. So what will happen now? The product is from someone else. The customer is definitely not within the bank. The bank is only owning the channel. Like suppose HDFC is saying, this is my internet banking interface. Through my internet banking interface, you can access your accounts of other banks also. Okay, you can use the products that has been offered from other banks. Or for example, suppose in HDFC you don't have the service of buying a gold bond, but that service is available with ICICI Bank. So what HDFC will do, they will simply call the API of gold bond of ICICI Bank in their internet banking channel through the API that is available. So here HDFC is only owning the channel but not the product of buying a gold bond. And here comes the final case, that is called where the bank will say, I only own the APIs, nothing else. So it's like the Amazon. What Amazon is doing? It's a marketplace basically. You want to sell something, someone wants to buy something. Amazon is integrating both of them. Same can happen for banking. So I can say, no, I have three financial products. You can say, okay, I have a very good channel. Now both of us want to do a partnership, but we don't know how to do. The bank is saying, we will create the API, we will maintain all the APIs. Now you guys come together and you do business. So that's the different model of the banking stacks from the traditional model, how it is slowly changing to a open model banking as a service to a marketplace model. Yeah, this is a very interesting use case. Here is Julie. So Julie is a small business owner. She does the accounting for her business with a web-based accounting software. She spends a lot of time copying transaction data from her online banking software to her accounting software. Okay. Julie's accounting software supports open banking. Now she wants it to sync with her bank account number XYZ. Now the accounting software requests access to the XYZ account from Julie's bank. Okay. As a precaution, the bank asks Julie if she really wants to share her transaction data with the accounting software. Now here you understand that it is never that without your consent your data will be shared. You want to use the advantage of open banking, a consent will be asked to you whether you really want to share this data. So Julie's bank account data, whether she really wants to share with her accounting software. And she says yes, and then the bank asks for a digital identity to log in into the bank account. Once this setup is completed, the data will now periodically flow from the bank to the accounting softwares. So the accounting software will now always remain updated automatically. She doesn't need to log into the bank, export the transaction details in an Excel and then feed it back to the accounting software. It will be done automatically. So it will help Julie to work very easily. Probably, I don't know how many of you, I don't think any one of you have filed any income tax return. Probably you are going to file it once you will start working for the corporates. But while you file an income tax, what happens? Earlier you had to take the hard copy, you had to courier it to the some office in Bangalore. Okay, but now it is very simple. There is an option called e-verify. So once your income tax return has been filed in the income tax portal of India, they give you an option to do a e-verify through your banking account. So you click on that e-verify, it will redirect you to your bank. You give your authentication of the bank, and when it is correctly given, it electronically verifies that no, the data you have given, the PAN number you have given is absolutely correct. That's how you see the use of the open banking in nowadays, how it is helping all the countries, including India, to improve their digitalization in the banking and financial sector. There is the second use case. It's the use case of Luz. So Luz wants to buy a home. It's not easy for her. So that's why she's not like in a good state of mind. When she finds her dream house, she wants an instant confirmation of a mortgage. Mortgage means what we call a loan. Many of you might have an educational loan. In future, you will also be taking some kind of housing loan or home loans. Okay, so that's what Luz is also looking for. But it's not very easy to get approval for your loans instantly. What can happen? You finalize one house, and then during while you process your loan, your that particular house might not be available for you. It's been sold to another person who offers the entire money without mortgage. Okay, but with the help of open banking, what Luz found that a mortgage with lower rate has been offered by a fintech called ABC. To assure eligibility, the fintech runs an affordability check based on the transaction history of the bank account. So suppose I am the company who gives loan on buying home. I will give approval of the loan, I will sanction a loan, but I need to check whether the person is able to return the loan, whether the person is having a good credit history or not. To look at that, I will need to go through the transaction data of that person's bank account. So as a fintech, the fintech requests the transaction data from Luz banks. The bank again asks Luz to authenticate and confirm about sharing the data. So once Luz confirm, bank shares the data with the fintech, and the fintech with all their automations and data science crunches all the numbers, and they can take a decision only maybe in 5 to 10 minutes time instead of going through 5 to 10 days. That's how it's helping the fintech also to grow their business. It is helping them to reduce their risk by giving a loan to a person who is not able to recover, and it also helps the customer who is actually having a good credit history to get a mortgage very easily. Now here comes the key questions that what will be the role of our bank in the unbundled open bank landscape? What will drive the customers to maintain relationship with us versus the traditional and the new competitors? What capabilities will we want to generate differentiation from traditional and new competitors? How will we evolve our technical architecture to support our changing roles? These questions are not still answered. That's why we all are working in this particular area to find out these questions. I'm personally working with many banks here in Latin America who are interested to use open banking. Some of them have already started, some are yet to start. They are looking how they can start. Based on that, if you see on the what I would say the quadrant on the right hand side, the 4 quadrants, where the quadrants have the 2 axes. On the x-axis, there's the bank's appetite for open platform transformation, and the y-axis we have the customers' acceptance and adoption of the proposition and services. If both the cases are high, it's a product champion. If the bank's appetite is high, but sorry, if the bank appetite is low and the customer's adoption of that product is high, it's called a product champion. If both are high, I mean the bank's appetite to adoption is very high and customer acceptance is also high, it's calling a platform player. And when the bank's appetite is high but customer is not accepting that much, it's called a utility provider. And when both the low, we are calling it a segment owner. Basically, traditional incumbent banking model who are offering mainly the in-house products and services, they are residing in this particular segment. Okay. This is the future of banking as a platform. If you see, this is the presentation layer which we are looking at. It have the wearable, the smartwatch, mobile. These are the different channels that I was discussing earlier. The mobile, the tablets, the internet, kiosks, ATM, all of these are the channels. Okay. Below that, what is there? We are having the integration layer. The integration is happening through MQs, messaging queues, then security protocol handling. Below that, we have the business layer, and finally, we have the data layer where the different types of data are being stored. So this is a reference architecture of the banking as a platform. On the right hand side, with the help of the external APIs, web APIs, here is the API ecosystem, which consists the AISPs. AISPs is basically the account information service provider. The PISP is the payment initiation service providers. And we also have partners, customers, Internet of Things, etc. So all of that we are able to interact with the core banking system through the external APIs. I will explain a little bit about the AISP and PISP. It's an important concept. So AISPs are authorized to retrieve account data provided by the banks and the financial institution. Similarly, PISPs are authorized to initiate payments into or out of a user's account. To become regulated as an AISP or PISP, companies must undergo a rigorous application process with the FCA. Some open banking providers can become regulated to be both AISP and PISP, but many only hold one authorization. Okay. An AISP company is authorized to access an individual SMS account data from their financial institutes with their explicit consents. For an example, the UK's 9 largest banks are required by law to comply with this request from the AISPs. Open banking framework and technical specifications enable years of transaction history to be retrieved in seconds. Examples of AISP application includes money management tools. Like some AISP collect financial information and digest in it in a way that makes it easy for people to understand their financial situation, create a budget, and monitoring spend. The new personal finance tool brings together data from multiple bank accounts so a user can see all of their spending at one place. The example I was giving about PhonePe or Google Pay. Similarly, the loan application process. Some AISP, including credit kudos, use the same capability to enable customers to quickly and securely share the financial information with a lender or a broker. The use case that was I was explaining for the home loan or the educational loan part. Similarly, on the payment initiation provider, the examples are the financial management tools, like some new money management and saving apps transfers a small proportion of someone's balance each week to a savings account under a previously agreed process. For example, many of you might be investing in SIPs, systematic investment plans. So you give a mandate to the bank to do ECS and automatically deduct a certain amount of money and transfer it to your mutual fund accounts. Okay, this is an example of PISP. And business solution, like new tools that integrates with business back office systems to allow companies securely manage the payment and collections, make real-time bank transfers, and have greater payment visibility. This is also an example of PISP. Okay. Look, this is the API economy, and this will need all those new capabilities. So a variety of additional capabilities will be required by API management vendors. If you look at the bottom, these are the different API management vendors. MuleSoft and APG, these two are like kind of the leaders because I'm currently working with both of them with a bank, MuleSoft and APG. APG is an offering from Google, GCP, Google Cloud Platform, and MuleSoft is an open source option. But both of them helps in application of the products. Okay. These are the different capabilities. We will, if you deep dive, you want to learn more about APIs, these are the keywords using which you can start learning what is an API gateway, what is API support, what is OAuth, what is API management, fraud protection or fraud detection, policy enforcement, etc. Okay. If you look at this Gartner's Magic Quadrant, you can see that Google APG, as I was saying, APG is one of the leaders, as well as MuleSoft. They are IBM. They are the leaders in the Gartner's Magic Quadrant of API vendors. Okay. Yeah. Probably this is the final slide I have. Basically, this is a very essential API strategy. It has mainly 4 blocks. Number 1, establish a digital strategy. Number 2, align organization and culture. Number 3, evaluate and build supporting tech. And number 4, engage your ecosystem. In stage 1, establish a digital strategy. What are the business activities you do here? Basically, align stakeholders on problems, opportunities, and competencies, articulate the business outcomes, determine the target audience, you establish your business model, you do a prototype and mocking, you develop a roadmap, and finally you secure your executive alignment. Okay, these are the steps you need to do to establish a digital strategy. What will be the key deliverables or the outcome of this particular stage? You will have a business case, you will have prototypes, you will have roadmaps. Now we move on to align organization and culture. In this particular stage, what will be our activities? We will socialize the API vision and executive mandate across the organization. We will establish the organization-wide values. We will drive service-oriented culture. We will align teams by service boundaries. We will try to institutionalize product-centric approach to API and services. We have to hire domain experts and democratize automation and innovation in our company culture. Okay. What will be the output? The output will be we have to have a number of certified employees. We will have achievement against our hiring plan, and we will have the NPS, Net Promoter Score, or SAT scores against our API consumers. Okay. When we are done with this particular stage, we go to evaluate and build supporting tech phase. Here we have to assemble full lifecycle API management platform tools. We have to establish API architecture and automation platform. We have to commence KPI consolidation and dashboarding. And finally, we need to activate the best practices for universal API management and governance. What will be the outcome? The outcome will be we will have time to market for new APIs, new apps. We will have our metrics for the availability and the uptime of our products. We will also have our security related key performance indicators. And here comes the final stage, that's called the engage your ecosystem. In this stage, we need to build and nurture the community. We need to publish our API catalog, like how we saw in the Kodak video. You remember that they were basically publishing their API catalog, the developer portal, the productivity tool. They were asking the other vendors to integrate with them. So basically they were in this particular stage, engage your ecosystem. They have completed all this 1, 2, and 3 stage. We need to formalize the training and certification of offering, then develop hackathon program. We need to launch collaborative feedback loop for versioning and supporting, then incentivize community partnership, etc. What will be the outcome? We will have a number of API calls, we will have new apps developed, we will have developers conversion or retention as an outcome. So that's how you need to build your API strategy and essential. I know it's a very niche topic, very difficult topic, probably not a very well-known topic. You might have only absorbed 50% of what I said, but the main idea of mine was to grow some interest within you, so that you start searching by yourself what is API, how you can create APIs. Probably you can start creating or writing code for your own API. Okay. So if you have gained some interest with this entire session, you now start searching, you go through the white papers, what have been available on the internet. You see the different, you saw this Kotak API also. You try to go to their website, see what are the things they are asking to get registered with them. If you can do some kind of small POC by combining with the banks like Kotak who are offering their developers portal for you, definitely you will learn a lot, and in the upcoming days there will be a huge demand of the developers who were able to create APIs for the products and the channels for the financial institution using different technologies. So probably you already know the code, the languages. Now you only need to know how to create the APIs, how to support, how to emerge using the open banking and open finance industry. Okay, so yeah, that was all from my today. I hope you enjoyed the session, and please feel free me to reach through our faculties of our college. So thanks a lot. Over to you, Paulumi. Right?
Wow, what a wonderful and enjoyable session it was. Thank you so much, sir, for convening such a knowledge gathering webinar. Okay, so now we will move forward to our question answer session. Now I'll request my friend Pavitra Kumar Bhunia to, if there are any questions, so please post it here. Okay, let's see for 5 to 10 minutes if there are any questions.
Students, if you have any question, then you can feel free to ask. You can just put your question in the YouTube. Okay, we will try to just convey this message to our speaker. So students, if you have any questions in your mind, then you can put in the YouTube, and we will try to give the answer shortly. If you have any question, you can feel free to ask. I'm requesting everyone who are online. Okay, if you have any question in the field of the open banking, then you can feel free to ask. Just put your questions in the YouTube link. That way you can just provide the question to our honorable speaker.
Okay, sure. Now moving forward, I want to request respected Professor Ms. Trisha Bera Ma'am, Assistant Professor of Department of Computer Science and Engineering, to felicitate our honorable speaker with a small token of appreciation. Over to you, ma'am. Pavitra, please share the screen.
No, it's not visible.
Oh, okay, yeah.
Okay, now. Okay, it's visible now. Okay, thank you, Subhranil Mukherjee, the speaker of this webinar. We are very grateful to have you, and the whole about the webinar. It's a very good topic that you have covered. It's a very uncommon topic that we don't know. So I think all the students have some kinds of idea of this open banking concept. So this is one of the very future, means the topic that is really very important for our future banking. So thank you very much, and this is one kind of certificate of appreciation for this webinar, that is actually we want to give you from the behalf of our CSE department of JIS College of Engineering. And please accept this certificate of appreciation. It will be.
No, thank you so much. And thanks to all the faculty members. It's an honor for me to get this opportunity to share my thoughts with all of you, especially my juniors who will be my colleagues in the future. So it's a small effort from my side to help them how they should prepare themselves, okay, how the industry is moving forward, because they need to be industry ready. Definitely, we are learning through the curriculums, but also need to understand what is happening in the industry as well. Okay, so no, thanks a lot for giving me the opportunity also. Thank you.
Okay, so I'm going to. So now the Sumanto sir or.
Yeah, so I'd like to request our, the respected faculty, Devasya Mitra, madam, please give the vote of thanks and conclude the session. Over to you, ma'am.
So good afternoon, everyone. I hope Subhranil, you recognize me.
Yeah, definitely, madam.
Thank you. So I think it was a wonderful session, and this session will help many students to achieve their success, their dreams, and it was itself a very informative session. And I hope in near future you will give us more time to interact with our students, to our alumni, and many other faculties also. So hope for the best and all the best for your future also, and whatever the project you are doing right now. And after the very getting this session, I am still very motivated for many banking related projects also. Those are students are doing in their classes and their projects, in many projects and many things. And the last one, I want to thanks to our HOD sir for giving us the opportunity to conduct this webinar. And I also want to thanks to our principal sir, our president of our alumni association, Mr. Sumanta Chatterjee sir, and most of all our managing director, Sardar Taranjit Singh sir, also for providing us the opportunity to broadcast this informative session on YouTube. So thanks to everyone, and thanks to every audience. I hope in near future we will get much more such. We will provide you such much more informative session like this. So that's all for the day. Good night. I hope Subhranil, we all will keep in touch in frequently.
Yeah, definitely.
Yeah, thank you so much, madam. Thank you so much.
Thank you, sir.
Yeah.
Good night.
So
Good night,
thank you,
everyone.
Subhranil, once again from your busy schedule that you have really come. Okay, you are far away from our location. Actually, you are from USA. Okay, so thank you so much. Okay, so definitely you will come again and you will just share your valuable opinions at the next time. And I hope that our students, they will get motivated and they will get the more information in the field of the open banking. Thank you so much.